Hello, everybody. I'm very happy to attend that global initiative in a digital way, in line with the COVID-19 sanitary restrictions. Well done. And to share a few slides, it's going to be quick and straight to the point on the new global real estate world, which is a challenging context today. First of all, to start with the office take-up in Europe, it's not going to be a surprise for anybody to share with you that the real estate world on the occupancy side has been seriously hit by a sharp decrease of office take-up in Europe, because we have an office take-up which shrunk at 38% in Europe compared with the same period last year. So it shows that we have a big wave, a cold wave in front of us. It's going to be more brutal for some cities such as London and Paris, and the German market looks more resilient to a certain extent. All in all, it means that we expect the future not to be better for 2020. And as you can see, we expect a further decline of minus 41% compared to the end of the year, which could be and which will be an all-time low over the last 2 decades. That's mainly driven by restrictions from the companies and remote working. Office vacancy rates in Europe, therefore, should increase. We have a global vacancy rate around 6.1% at the end of the second quarter 2020, and we expect to be between plus 20 to plus 40 basis points within most of the European cities, some of them being at more than 150 basic points. The COVID crisis should even accelerate the increase in vacancy in 2020, and we expect that some cities could go to something in the range of plus 100 basis points by the end of the year. That could be 80 basis points in London and 170 in Paris, but it could remain extremely low in Germany and quite modest in Milan and Madrid. So it means that all the cities are not hit in the same way in Europe, which could be an introduction for the discussion we have on the European cities. That situation is slightly different if you go to most of the European CBDs. As you can see, we still have a kind of shortage of good quality products, but it's on the limited geographic sectors. If you go to office prime rents, we have to bear in mind that over the last 10 years, we have got a huge growth of the rental rents of the rental positions in Europe, plus 34% on average since 2009. So as you can see, we expect few changes in rents in CBD. We don't expect rents to decrease more than 5% in the forthcoming months, but we rather expect that landlords could offer bigger, longer rent-free periods to securize transactions with occupiers. If you go to the investment world, we could see that we expect very modest upward in prime yields, plus 10 basis points on core products, but strong repricing on speculative assets and on some value-add products. So once again, this is not the same situation if you appreciate the quality of the supply. So these are the key figures in a short nutshell on the expectations we have in terms of take-up volumes and investment volumes in Europe. So now let's go to the heart of the discussion today, is the development of future cities. And I do believe that within that context, which is something which never happened in the past, the real estate industry has a key role to play to build attractive products in line with new expectations arising from a post-COVID world, both from investors' strategy and from the occupiers' expectations. The 21st century will be the century of cities, and because the share of urban population, as you can see on the right part of the slide, is expected to reach at plus 68.4% worldwide by 2050, which is due to natural increase of the population and to the growing phenomenon of migrations in continental Europe, in the world, and more specifically in continental Europe. Land management will therefore be crucial, because we do think that the key drivers for these new cities will be accommodation, jobs, public transportation, infrastructure, security, and cultural life. The real estate industry will consequently have to play a bigger role than in the past to design the future cities across the world in a post-COVID-19 horizon. The first way to deal is to work with the existing situation. And it's going to be even more difficult in the future to say, let's get rid of the past. We will need to work on to reuse the materials we have. We will have to have a resilient city. Space have been to reuse and reconstructed over themselves and to be improved. I just wanted to share some example of regeneration of former industrial areas. One of them being in the Netherlands, in Antwerp. The port was almost completely abandoned in the 20th centuries. We had warehouses on old industrial lands being replaced, redesigned in a new district since the 2000. Today, this is the city's best touristic asset, with museum and a good combination of culture, offices, residential amenities, and based on sustainability. Next one, okay, because I also have to run the clicker, which is quite challenging. It's an example of urban regeneration in the southern part of Europe, Madrid. And once again, this is the complex which is called Nueve Norte. This is a 7.3 billion mega project located in the north of the capital. And this is the largest urban regeneration project in Europe. And we do think that it should be completed in 25 years. And it will be a complete regeneration of what we call the Chamartin Station District. It's a combination of residential, 1 million square meters, and offices, more than 1.6 million square meters. The next one is, that's Madrid, Nuevo Norte as well. And this is an example of a new office building design for a big international firm in Spain. And this is a new example of new ways of working based on providing many things to end users. I could come back to that situation during the discussion. So we do believe that the city of tomorrow will be a multifunctional city. We don't believe that these cities will have to be designed only for residential amenities or only for retail space or only for logistics or for offices, because we do think that the principle of single-use zoning are behind us, because we do think that the expectations from both investors in terms of risk profile and in terms of occupiers, in terms of attraction and retention of our key people, will be what we call multifunctional cities, multifunctional buildings, mixing all the types of lives you could desire between residential, culture, offices, retail. And functional diversity will be the key concept, for instance, of Roppongi Hills in Tokyo, where basically you find anything, anytime, for any type of people. This is the concept which is very fascinating for us as developer, advisors, and property and investment managers. This is the concept of 15-minute cities. That concept will already be reinforced aftermath of the COVID-19 crisis we have to go through. If you go still in the south of Europe, in Milan, city life in Milan could be a good example of that combination of everything. And last but not least, it's also a very good example of architectural signature, which makes sense for residential users, but also retail and business occupiers. So we do think that building a smarter city is not going in the future to be a nice to have, but a must have. If you want to have a secure investment, you will need to combine smart mobility, reusing natural resources, a building which could be extremely resilient, green certifications, and some buildings which could one day provide and accommodate offices and could be reconverted in a combination of future uses which could not be thought about right now. what we are sure about is that the buildings of tomorrow will need to be connected, to produce data, and to play a role of being flexible within the new lives we are working on for the future. This is something which never happened in that scale within the real estate industry within the last 50 years. And I appreciate that it's a challenge, but it's also something which is extremely fascinating for the real estate industry. Thank you.